welcome to the Market Alert for Thursday, the 19th of September 2019. So yesterday, as expected, interest rates were cut in the US. Stocks bounced, no surprise there, and Powell hints that there's going to be QE4. And if we look here, let's come to the top first. Powell confirms QE4 is coming, not just today. And then you get Trump's outrage. Trump slams terrible communicator. Powell, he failed again. Unbelievable. When he was campaigning to be president, he was saying how overvalued the stock market was and they should stop printing, get the debt down, and now he's a firm advocate of it. And again here, watch live. Fed Chair Powell explains why he ignored the biggest liquidity crisis in over a decade. We had another one yesterday as well. So it's sort of like a silent panic is anyway to put what's going on at the moment. Behind the scenes, it shows you that the pure manipulation in these markets to keep them at this level when there's a liquidity crisis in the financial system. So yeah, let's take a look. If you ever wanted proof that there is manipulation, then you're seeing it right now, that's for sure. So yesterday, the Dow trading up towards the 76% retracement. The interesting thing here is, though, even though they got the rate cut, it's either priced into the market or the market is really tired, and it's going to take a bit more financial heroin that they've had since 2009 to actually move the market higher. Yes, it's manipulated, but unfortunately you've got to inject something in it to actually keep it going, and that's what they found last autumn when they increased interest rates, that they stopped because as they continue to increase them, the market wasn't having it, and to keep the illusion alive, they stopped increasing interest rates. And now there's the prospect of rates moving lower, which they did again yesterday, and of course injecting more financial heroin into the markets. But it's looking tired. It's going to take a lot to go any sort of distance, let's put it this way. So yesterday the market moved lower, traded higher. Where did it trade to? 200 bar moving average. It trades back. You'll see in between all of this, not going to draw them all in, but the 76% retracements as the market moved lower from here to here. We get 76. We didn't get a 76 back. We've already broken the 200 bar moving average and the DP level. These have become resistance, as did the other averages as well, which I'm just going to slide this over just so you can see it a bit more clearly. There you go. So we've got these swings up and down making 76% retracements. This one isn't. This is a double bottom here as the market comes back, but this one is. Then the market moves higher, and it was just treading water. But again, don't overlook what's actually going on. You can see that having broken the 200 bar moving average, come back through the other two, these then become resistance as well. And you can see exactly what's going on here, and then how the market is using these to bring prices back. And then eventually we get the news. The news is not well received because it was already priced in. Market goes through the 200 bar moving average, comes back. We then get consolidation at the bottom, no 76% retracement, but we get the buying coming into the market, and would you believe it, there we go, all the way back before the end of the trading session. Same pattern for the last 11 years, no surprises here if you've watched a few of these market alerts. Today, the only reason I'm looking at the news is it's the UK's turn today with interest rates. Nothing's going to change here. 0.75. They can't increase interest rates in the UK. There's absolutely not a cat in else chance unless there is a bond market failure. That's the only thing that they could actually do. You're not going to see interest rates go up anytime soon globally, with Europe actually further negative, starting to print 20 billion per month from next month. The end of October. starts on the 1st of November, just as the criminal Lagarde comes into office. And pound yesterday, let's have a look at this. We're not doing a lot. It was the defence's turn yesterday in the Supreme Court. Amazing how this was moved lower as the Remain case was put forward. And again, you can see 76% at the 200 bar moving average, prices moving higher. No surprises there, as the market then discounted the court case and then started to look towards the US dollar. The prices moving back to the upside. Again, 76% retracement here from this low to this high, back at the 200 bar moving average, and then trade to the upside. Where's the market come back? Just drag this chart across. You will see from here. Yeah, let's do that again. I had the wrong spot then. From here to here, you get to 76%, and also from the right spot again. From here to here, 76%. So you can see exactly where prices are likely to trade back to. They'll do this at least 8 times out of 10. As you look at this, you'll see exactly what's going on. So at the moment, the market just above the 200 bar moving average found support on this overnight as well. Daily chart stuck in a bit of a sideways range with prices attempting to move higher, putting in a bit of a ascending triangle formation. If prices do break to the upside, which is highly unlikely if the courts dismiss the case, Gina Miller's case, then I would expect the pound to shoot to the downside, personally. So again, keep an eye on that. It's either today or tomorrow when the verdict is announced on this one. Then in Bitcoin overnight, the market has dropped. I know it's overnight because I was here at 1 a.m. this morning, having a coughing fit, and noticed prices were very quiet. And then if we look at the 15-minute chart or the 4-hour chart, let's just have a look at this. So we can see that the Bitcoin market overnight has traded down to the 76% retracement we've had in here for a while. It's bounced off this, and we can see this in the 4-hour, where prices are heading back towards the 200 bar moving average. And in the 15-minute, you can see the $600 drop in Bitcoin overnight, and then it's just a matter of moving back to the upside. Some nice activity here, so fingers crossed this will remain for today. Yesterday, you can see, if I had moved the chart over a bit more just to rescale it, the 200 bar moving average gave this market some grief in all of these places where prices then moved lower. So yeah, fingers crossed, we've got a bit of activity coming back into Bitcoin, sort of kick-started it, got the engine going again there. And then finally, implied volatility down for yesterday. They don't see an issue with what Powell's done. Going forward, we could see the market head back to the all-time highs, is what this is saying at the moment, but it's going to need something special, I think, to try and drag it up to the upside. Personally, again, you can see this all green above the 20 bar moving average at the top here as well. And yields are up to date, unusual for the Fed site, but you can see they're still in the red though. And that's it. So still the recession looming in the next 18 months. And yeah, we'll see what happens today anyway. Don't expect a lot from Barmy Carney. So the market will be waiting more to see what happens with the Supreme Court's decision. And the Dow will have to make its own way. Okay, that's it for this one. Thanks for watching. See you in the next one.